Yo, what's up, family? What's up, friends? OG Larry, GTradestv got one for you to put on your radar again because we've talked about this before. The last time I tried to put this stock on your radar, it was under $90. It was in the $88, $87 range, and that ticker is Netflix, NFLX. Netflix has taken off, and as I told you it would, or as I had kind of speculated that it would. I'm not a it just had been beat down so much for so long, and then releasing the jumping out of that deal for the WDB deal, Warner Brothers, WBD deal, Warner Brothers deal. They made huge gains just by doing that. Just by doing that, they were able to accumulate $3 billion, or because they're just not to take the deal. Paramount had they had it was almost probably like a contract. They're on the contract, and if they sold the contract or if they jumped out of the contract, they automatically got $3 billion. So that's ad revenue right there within itself. So they have that. They have that to go on. So walking away gives them a cash pile, and they have a price target for this year, 2026, of $150. So if you're holding and waiting for a lower entry, then you might get it, you might not. But Netflix was beat down after earnings, and the bull case scenario form is that the tier ad revenue is projected to hit $3 billion. That's 6% of their total revenue. This is a high margin, and it's found money. They have live sports pivot after the massive success of their 2025 events. Christmas games gave them 27.5 viewers. They're now a serious player in live events, stealing the last moat traditional TV had. And the WBD discipline, walking away from the Warner Bros. Deal, they saved $80 billion in debt. So that would have been taking on way too much debt. They didn't want to take on that debt, $80 billion in debt, just to have Warner Brothers in their portfolio wasn't worth it to them. So they put their shareholders first and the company first, and they're deciding to make money and keep the profit margins high rather than going $80 billion behind early this in the year. So that's choosing to focus on internal growth, cloud gaming instead of risky integrations, as it would have been with the Warner Brothers deal. So they're trading at a PE ratio of around 36, 37, and that's 50% lower than it was a year ago. So they still have a uh, growth rate at a reasonable price, which is GARP, growth rate at a reasonable price. So that's another good thing for Netflix. So they got the ad tier double dipping their ad revenue and the live infrastructure with NFL Christmas Day games, WWE Raw, Major League Baseball specials, and Netflix has shoved a weak link, and that's the churn. And viewing for sports gives people reasons to hit the cancel button or not to hit the cancel button. Let me get that right. They're effectively becoming the new cable TV, but with better tech and 325 million global subscribers, it's kind of hard to not understand that Netflix is going to be a real big company and it's going to be real profitable for a long time. So you can put this on your radar, put it back on your radar. Like I said, I can't tell you what to buy, hold, or sell, but it's in a great buy zone. Even if it were to pull back, had this big gap up. I don't know if it's going to come back and fill this gap, or it could just gap and go once it gets over 96.75, which was a recent high. Get back over that again. I think 100 is close by. So put Netflix on your radar, peeps, and I'm gonna keep them coming at you. We should be seeing other stocks in the buy zone real soon. Not every area of the market is in a bear territory. You have some, like some of the software companies that are taking a beating right now, but you have strength in other areas of the market. So that's what we'll concentrate on. Netflix was strong Friday as the market was pretty weak, very volatile, up and down a lot. And the SPY was trending down Friday. If you see this, this is a SPY, and this is an indicator for a lot of major stocks in the market. So as you see, it was a lot of chop, a lot of back and forth, a lot of fighting. But the overall trend, that's the 4 hour. Let's look at the daily. The overall trend, zoom out even more. As you zoom out all the way to the weekly, we're still trending up and we still have a bull case scenario, even with these pullbacks. I think as long as the SPY is over 670, 665 in that area, I don't know how far down it'll go before we're going to consider bear market, but I think we need to break some of these lows, and if we don't, I think we still have the potential to go back to the upside and get to that $700 range. So, like I said, keep Netflix on your radar. So it's one to watch. If you see that candle from Friday, this weekly candle is very, very bullish. So we get back over our 96.75 this week, we're headed to the upside, and I'm back in. So that's all I got on this one. It's have a good Sunday. Be out of here. You guys take it easy. Peace.